Okay. Hi, nice to meet you, Mr. Chamberlain. I have to apologize because I haven't spoken English for 2 months, so my English is a bit rusty.
No problem.
Well, try to talk slowly and articulately. I know you emailed on Friday just to ask for a little bit more background just on the ring. So do you think is it useful just to run through quickly what happens on the ring and the changes that have been made in the last few months?
Yes, that'd be great.
Okay, I'll hand over to Matt then.
Yeah, is on the record?
Yeah, on the record.
Yes, that's great. Sounds good. Well, nice to meet, and thank you for taking the time. So, the LME is the last exchange in Europe that has open outcry trading, i.e. people meeting in person and trading. And even at the LME, we have become predominantly electronic. So even before the pandemic, only 10% of the trading was on the ring. The rest was online. But the reason that the ring has lasted longer at the LME than other exchanges is because the pricing we do at the LME is quite complex, because we have this daily date structure. So we trade, say, copper or aluminium for any date between 2 days, 1 day forward, and 10 years forward. So for copper, there are 127 different dates that you can trade on. And that's a lot more than most futures markets. So there has always been this view at the LME that it would be dangerous to move the pricing electronic, even though most of the trading is electronic, that to move the pricing electronic would be dangerous because we didn't know whether it would work given the complexity of the date structure. And that's why we have had the ring right up until March of 2020. Now, obviously, when the pandemic came along, we didn't have a choice. So at that point, we had to try electronic pricing because there was no alternative. It simply wasn't possible to keep people meeting in person. And so, we had to do it, and so we did it. And actually, we surprised ourselves because the electronic pricing worked really well. So from the 23rd of March 2020 until last week, we were fully electronic, and we were really pleased with how that was working. So the pandemic forced us to do something that we wouldn't have done otherwise, and we were pleased with the results. So what happened is in January of this year, January of 2021, we actually put out a discussion paper to the market, and we said in that paper, look, electronic pricing has worked really well. We're very comfortable with it as the LME. Maybe we should stay electronic forever. Maybe we shouldn't reopen the ring. And that got a lot of discussion. So we had 192 responses, so people writing to us about our paper. And it was basically split half and half. So the financial community, the investors, the people who kind of buy copper as a speculative investment, and a lot of the big banks, they said, yeah, stay electronic. It's so much easier for us. It's how all the other markets work. You should do that. So about half of the market said, stay electronic. The other half of the market, which was mainly the ring dealers, obviously, but also the smaller physical players, because we have a lot of physical players who hedge their metal purchases or metal sales on the LME, they broadly said, no, we'd like you to go back to the ring, because we think even though electronic pricing works, the ring works better, and it's nice to have the transparency of being able to come and look at the trading, etc. So we were a little bit stuck because half of our market was saying to do one thing and half our market was saying to do another thing. Now, luckily, there's actually two sets of prices that the LME produce. So at lunchtime, London time, so just about now, we produce the official prices, and they're used mainly by the physical community. So anybody who buys or sells metals on the LME, but also more broadly, even if you're just buying metal from a producer, you'll probably use the LME official prices. And because the physical guys prefer the ring, we said, okay, we will move the physical prices back to the ring, the official prices back to the ring, and that happened as of last Monday. So we took those prices back to the ring. But we also produce, at 5 o'clock London time, 5 p.m., we produce the closing prices, and they're mainly used by the financial community to mark their portfolios or to buy or sell units in mutual funds that relate to commodities. And because that community like electronic trading, what we said is, let's keep those prices, those closing financial prices, on the screen. So we basically split our pricing, official physical pricing on the ring, closing financial pricing on the screen. And that seems to have worked really well in that the users are happy. The physical users are happy to be back in the ring. The financial users are happy to stay electronic. The big question is, does that work for the ring dealers? Because obviously the ring dealers, the used to be the 9 companies who have people down on the ring, we're still asking them to go down to the ring, but they don't have as much to trade. And actually, one of the 9 has already decided they weren't going to come back because they said there's not enough business for us to do. The other 8 are back. They're doing a really good job. We want to make it work for them. We've given them some fee discounts, etc. But ultimately, over the next few weeks and the next few months, I think the ring dealers are going to have to make a decision. Does this work for us? Does it work economically? I really hope it does. They can trade in the ring and then go to their little offices to do the closing prices electronically. As I say, we gave them the fee discounts, so I hope it works for them. But ultimately, the ring dealers will have to decide. We'll keep the ring open for as long as the ring dealers want it. But if they did decide they don't want it anymore, we can just move everything back electronic with no problems. So that's kind of where we are right now.
And can I ask, these 9 or 8 companies, how are they chosen? Do you need to meet certain conditions to attend physically to the ring?
Yeah, great question. So we have, say now, 8 Category 1 members, and we have, about 40 Category 2 members. So the Category 1 members, they go to the ring. The Category 2 members, they just trade electronically. And obviously the big banks tend to be Category 2 members. So most of the big investment banks are Category 2 members. The requirements are pretty much the same in terms of capital adequacy, in terms of buying shares, etc. The requirements are the same. So the only thing that's different about the Category 1 members, the 8 people who go to the ring, is that they want to do it. So anybody can become a Category 1 member if they're already a Category 2 member, but you have to want to send the people down there. You have to have a team who are willing to go down there. And at the moment, only 8 of the total, they want to do that. So that's why they're the Category 1s. They're the ones who've chosen to go to the ring. As I say, most of the members, and particularly the big investment banks, they'd rather sit in their offices and trade electronically, so they're the Category 2 members.
And what's the advantage of attending the ring?
So it's basically that only the people who are in the ring have direct access to the pricing. So if, let's say that you're a physical aluminium buyer, and you want to buy metal and you want to hedge on the LME at the official price so that your financial hedge matches your physical contracts. The only guaranteed way to get metal at the official price is to ask one of the ring dealers to do it for you, because they're the only ones who have that direct access to the pricing in the ring. So the advantage of being a Category 1 is that you can offer your customers access to the actual pricing. And so obviously now for the official pricing, the Category 1 members can still do that, but for the closing prices, they no longer have that special status because anybody can trade the closing prices electronically.
And so what positive and negative effects have you seen for traders at the LME during this past year that you have been operating electronically?
Yes, so I think it totally depends on the type of trader that you are. So if, for example, let's say I'm an American hedge fund, right, and I want to buy, and I want to maybe buy copper because I want to play the electric story, or I want to buy aluminium because I want to play the sort of global growth story. For those guys, they've generally told us that they've been very happy over the last year, because even though they're sitting 3,000 miles away in America, and maybe they're even at home, working from home, they've got their trading screen in front of them, and they can participate directly in the closing prices, because what they know that if they trade electronically during that period, their trade goes towards the closing prices. Whereas when the closing prices were in the ring, they used to call us up and say, "Hey LME, I'm really cross because I traded at this price and you marked the contract at that different price," and we have to say, "Well, I'm sorry, if it wasn't traded in the ring, it didn't count." So for that kind of American hedge fund investor, they would generally say, many of them would say, it's been really positive because they can trade on our platform and they know that trading is going towards the price, so they feel the price represents what they've done, rather than the price only representing the trades that happened in the ring 3,000 miles away here in London. So that kind of trader would say it's been really positive. But obviously the ring dealers in particular, they would say that it's been negative because they think, and they believe very strongly that ring pricing is the best pricing, that it gives the most accurate outcome, because you have 9 people or now 8 people who are focused just on that metal. They're totally focused, all the prices are like aligned, whereas what they would say, the ring dealers, would say that when it's electronic, anybody in the world can participate, and they're not paying attention, right? They're not looking at what's happening. Maybe they're trading like 10 different markets at the same time. So the ring dealers would say that the quality of pricing is lower because fair enough, you have more people participating, but they're not all experts, they're not all kind of paying attention to what's going on. So that's kind of the debate.
And from all the answers you received in this consultation, was there any that surprised you?
Not really. I mean, in general, it was as we expected, as ring dealers and smaller physical players liking the ring, and then larger players and financial players liking electronic. I think, I was surprised by how many responses we received. That was good. It's nice that people care, but it pretty much broke down as we expected.
And one of the arguments for going electronically is also that by closing the ring, you reduce costs as well. How much would that reduction be in costs?
Yes, so for us, actually, for the LME closing the ring, it's not a really big cost saving. I guess, arguably, there's the real estate, but we know that the real estate market isn't great at the moment. So, unless we've got a long lease on this building, so unless we can sublet it, then we can't save any money. So it's not really a big thing from a real estate perspective. And although we have a lot of staff in the ring, when the market's trading electronically, those same staff are looking at the screen. So it's not as if we would have a reduction in the number of staff, and we wouldn't want to. So actually, okay, there's like some small costs, but it's not really for us. The reason we proposed closing the ring, it wasn't a cost reduction story. It was much more a revenue story, in that we think those American traders, I don't just mean Americans, but they're a good example, right? Those American hedge funds, that they will bring us more business because they'll say, I feel more connected with the LME. I feel that LME is reflecting the trading that I'm doing, and that they will put more business onto our market. So it's really a revenue story when we proposed closing the ring, not a cost story.
And some traders say that they're okay with electronic trading, but they don't specifically like the one that you have, the LME Select, I think it is. Have you heard this before?
Yeah.
You received many complaints about this.
Yeah, so I think there's a couple of points. The first is that exchanges always have to be upgrading their technology. It's a constant game that your technology has to get better and better, and we're definitely doing that. So we have a totally new version of LME Select, which will launch in 2023. It's actually based off the Hong Kong Exchange platform, so we're owned by the Hong Kong Exchange, and it's a totally new platform they built a couple of years ago, so that we can always improve our technology, and it's certainly something that we're doing. But I think it's important to note that a lot of the criticisms that you hear about electronic trading on the LME, it's not because our processors are this generation versus that generation. It's not a pure technology thing. It goes back to that point I mentioned, which is that LME is a really complex market because of all those dates. And so generally when people, on many markets, on any market, people will say, I don't think you got the pricing right. When people say, we didn't get the pricing right, they think that March aluminium should have been 3,000 rather than 2,900. The reason behind it is normally that there's a disagreement about which sort of rules to follow. So because there's all these dates, you can construct many pathways to get to the price of aluminium in March 2020. You could say you should look at the January price and then the January to March adjustment. Or you should look at the February price and then the February to March adjustment. And we're not very good on our market at defining which route you should take. Because in the ring, the ring always kept the market in line because everybody was totally focused on what they were doing. On the screen, like I mentioned, you have hundreds of people trading. They might all not be super focused. They might be trading different dates and different prices. So probably what we need is a more clear set of rules for how we price each date. And that's how other electronic markets work. So we've got our closing prices working group, which consists of people from all around the industry who are advising us on a new kind of set of rules for how we determine the price in an electronic world. So that, I think, is actually the key thing. It's about the community agreeing on the kind of set of rules for how we determine the price of everything, because there's so many different ways you could get to each price. And then it's about constant investment in our technology as well.
And, there are other trading floors, not here in Europe, in America, that are going to close this year permanently. Do you think that the LME is, or have you received many criticisms about the LME staying behind by not going fully electronically?
Yeah, definitely. So that the first group of people I mentioned, the half of the market who said we should go fully electronic in our discussion paper, they would use exactly that argument. They say, come on LME, it's the 21st century, everybody else is doing this, why can't you? Why are you so stuck in the past? And as I say, that's why we came up with the compromise, because generally those people are using the closing prices, and that's why we're having the closing prices electronic. And what they've told us is they've said that's actually a great outcome. They've said, look, if you want to keep the floor to do the official prices, that's fine. We don't care about, the financial guys don't really care about the official prices, so they don't mind whether we have the floor or not. So in general, the financial guys have welcomed what we've done. They've said it's been a big improvement, and they don't really care about whether the floor is there for the physical prices or not, because they don't use them.
And on the other hand, the other people who are against it, some of them say that it's because the LME wants to attract investors more than the physical traders, people who actually are going to have that metal in their hands. Do you think the LME needs other kind of players?
It's a great question, because we are definitely a much more physical market than many of our peers, and you can see that at the moment, look at copper prices are really taking off, aluminium prices are really taking off. You see other markets, both in the US and China, their volumes really go up because you have lots of investors who want to play that story. At the LME, the volumes don't go up very much because the physical guys, they're still buying 25 tons of aluminium, wherever the price is. They're not going to buy more or sell more because they're using the same amount of metal in their production. So we are a much more physical market, it's true. So look, we always want to be led by the physical market. So, for example, our date structure, those 127 dates, we're gonna keep that, because the physical market want that, and I'm always going to put the physical market first, because they're our core, right? They pay us great fees every day, every month, every year. We're dependent on their business. We're never going to to leave them behind. But I don't think that it's a choice. I think that you can have a really active physical market and a really active financial market, as long as the financial guys play by the physical rules. So we've always said to the financial community, please come and trade on the LME. We'd love to have you on the LME. You're going to have to accept some things like the date structure, because we've got to keep our physical friends happy. But if there's other things we can do for you, then we'll do that. Because of course we want the investment business in. We want it because we're a business. We want as much activity as possible. But also because I believe that liquidity helps the physical market trade more cheaply. If there's liquidity that people can trade in, that's why you come to an exchange. So that's why, again, I think the compromise is a really good one. Because we've said to the physical market, the official prices will take them back to the ring. That's what you asked for. We're not going to go against the interest of the physical market. But we can also get the financial guys in as well. And I don't think we should see those as opposed. I think both groups can support each other. It's one pool of liquidity and everybody trades in it.
And I don't know if I have the right numbers, because I read in previous interviews that you gave that with the electronic system, the volumes were going up, the trading volumes were going up. But then the Excels I downloaded from your website said that they had actually gone down by 12% in 2020.
Yes, so I mean, we can send you numbers. I certainly think that the volumes across the board have gone down for us in 2020. And there's a few reasons for that, but I think the biggest one was simply the fact that the pandemic meant that some people who generally take risk on our market decided not to take risk. And it's interesting, if you look at some of our peer markets, what helped them during the pandemic was retail trading. I mean, you saw that in US equities. I think you saw it on some other commodities markets, that the institutional guys kind of sat on the side because they didn't know where the risk environment was going. But you had all of these people who were stuck at home with nothing to do who started trading, right? And they were trading some equities, and they were trading some derivatives and some commodities. But obviously they're not connected to our market, they're not connected to the LME, so we didn't benefit from that. So it's definitely the case that volumes went down in 2020 for us on all of our venues, mainly because I think there was just, the people who normally trade on our market weren't putting on as much risk. That's definitely true.
Yes, you now have these apps where you can also, well, not only invest on stocks, but some of them also offer the chance of investing in certain metals. Do you see a future where these apps will include the metals that the LME usually trades, and do you think that would affect the LME's business?
Yeah, so really interesting. I think we absolutely have to be ready for that. And certainly, if I look at China, I look at the metals markets in China. There is huge retail participation and mobile trading, exactly as you mentioned. Again, the LME itself is a tough market for smaller traders because it's, as I say, quite bespoke. It's got the date structure, but also, for example, our copper contract is 25 tons. So that means that one contract is about $250,000 notional value, which is quite a lot for a retail investor. I mean, obviously they don't have to pay the full $250,000, but even the margin on that, one lot, one contract, you can be paying $25,000 in initial margin. Whereas all of our competitor markets in both the US and China, they're much smaller contracts, so a retail trader could trade them. So that's just an example of how we're not set up for smaller traders, and I think that's a shame because I think smaller traders should be able to participate. So maybe what we should, what we've looked at is, could we work with providers who can structure more retail products on the back of our institutional contracts to give that kind of access. So I think you're absolutely right. I think retail trading will continue to grow. I think metals will be part of that. And I think it's important that the LME, again, we don't want to lose our physical basis, but if all the retail trading is happening on different markets, then that's where the liquidity is going to go and the LME could suffer. So we've got to get that balance right.
And are you personally, I know we have very few minutes, but are you familiar with all the signs and gestures that they do at the ring?
So personally, I've never fully understood the ring sign language, but we have a number of people on the staff here who used to trade in the ring, so they know what's going on. But I've always found it a little bit of a mystery, I'll be honest.
And just to finish, so to have it clear, what is going on now, the hybrid system is like a pilot, and in some weeks you're going to see if it has worked or if it goes on or not.
So what we've said as the LME is that we now think this is the right route forward. Based on what we heard in the discussion paper, we think it's the right approach. So for us, this is permanent. This is what we're now planning to do for the next 5-10 years. But I think the ring dealers, the Category 1 members, they will, I know they are looking at whether it's working for them economically. So from the LME perspective, we're saying, yes, this is how we want things to work, but we acknowledge that the dealers will need to make a decision, and I think they'll probably do that over the next few months.
Okay, well, thank you very much, Mr. Chamberlain.
Perfect. Really appreciate your time. Thank you so much for being interested in us, and I hope we've given you what you need for your article.
Yes, and thank you, Miriam, too.
No problem, and let me know if you have any further questions, and if you wanted to check anything with me before you publish, then happy to have a look.
Okay. Yes, if you had pictures of the first week of the ring, it would be great.
Yeah, I'll see what I can find. I don't know if we actually have our own, but let me check.
Okay.
Otherwise I know that the Press Association has some, so you can get them.
Okay. Well, thank you very much.
Okay. Thanks.
Bye.
Have a good day.
Bye-bye.
Bye.
Bye.